Hi, and welcome to Financial Accounting 1. Today we're going to create a balance sheet. Hopefully you've watched my other two videos on how to create an income statement and how to create a statement of owner's equity. In this video, we will create the third and final financial statement, a balance sheet. So what we have here is Danielle's Dance Studio, and she has the following balances as of October 31st, 2012. We have Danielle Capital here. We have the owner's capital number. We create this financial statement third because we need to create the statement of owner's equity in order to find capital and use it for this exercise. So Danielle's capital has been calculated. You would have created a statement of owner's equity to find this $5,000 to use for the financial statement. So we'll get started. We'll start with our heading. Every financial statement starts with a heading. It's the who, the what, and the when. So first we'll start with who, and that tells the user financial information. Whose financial statement is this? In this instance, our instructions tell us it's Danielle's Dance Studio. That's the name of the business. So we'll go ahead and type in Danielle's Dance Studio, and that is the name of our business. Next, we have the what. What tells the user of a financial information what statement they're looking at. What am I expecting to see when I look at this? And this is a balance sheet. It's the name of this statement. So I'll put balance sheet in for the what. Finally, we have the when, and hopefully you have seen my other two videos on income statement and statement of owner's equity. The balance sheet when is slightly different than an income statement or a statement of owner's equity. Both of those are what are called change statements. They cover a period of time and the changes in the accounts over time. This financial statement, the balance sheet, covers only one single point in time. The when is like a picture of what is happening on October 31st, 2012. The balance sheet really only reflects the balances on this day only, October 31st, 2012, like you've taken a still picture and captured what it looked like on that day. If we look, we have cash here, cash for $2,000. If we think about it, what you had for cash in your wallet yesterday probably isn't what you have for cash in your wallet today. That number is always changing. In fact, throughout the day, the amount of cash in your wallet may change. What you had in the morning may not be what you had at the evening. So what we say for the balance sheet is this is what cash was at the end of October 31st, 2012. At the end of the business day, cash would have been $2,000. Although it may change there on November 1st when we start paying bills and receiving cash for all the dancing we are teaching. So the when is going to be for a single date and time, and I'm going to type in October 31st, 2012, and that is going to be our when. Let me change the formatting so that it looks nice. We never want to leave formatting that is not nice when we are working on a financial statement because we want it to look pretty. It's a formal statement that users are looking at, so it's somewhat like writing a formal paper. We want everything to be nice and formatted. We don't want to leave it kind of yucky and shorthand. So what we are going to do is we are going to do a vertical balance sheet, which is more common for a corporation or another business. They generally do them vertically. What you may see in your textbook is a horizontal balance sheet with assets in one column and liabilities and owner's equity kind of set up in this fashion. But we're going to not do it that way. We're going to do it up and down. Use the vertical presentation. And if you are in my class, you'll see that in chapter 2 they present the horizontal, but in chapter 5 they present the vertical. It really just has to do with how the accounts are set up, and it really makes no difference. You can think of it as just cutting the paper in half and putting it underneath, and it'll present the same. So the first thing we're going to do is start with assets. So if we look at our accounts over here, we have cash, accounts payable, accounts receivable, studio, furniture and fixtures, vehicle, and that should say notes payable. change that to notes payable, and Danielle Capital. So let's go through and identify what our assets are. How about cash? You guessed it, it's an asset. Accounts payable is a liability. Accounts receivable is when someone owes money to us, so it's money coming into the business. We have a right to it, so that makes it an asset. Studio furniture and fixtures is also something we own that has a benefit, helps us to run our business. A vehicle, also something we own that helps to run our business. Notes payable would be something we owed, like a loan, so it's a debt, and they code it as a liability. And finally, Danielle Capital is an owner's equity account. I'm just going to call it OE. So now that we've identified them, we should be easily able to list our assets. Assets generally listed in order of liquidity. Liquidity means how easily you can convert it into cash. So I'm going to follow that rule. If you're in my Financial Accounting 1 class, there are no points for putting them in liquidity, so you don't have to get worried about that. So I'm going to write cash as my first account, and cash has a value of $2,000. Then I'm going to list my next asset, which would be accounts receivable. Remembering that accounts receivable is money coming in from customers who are going to pay us later. They're doing it on account. And that was 1,000. I put in 100. Watch my zeros. Finally, we have studio furniture and fixtures, and that's an asset. We'll put that in for 5,000. And finally, our least liquid asset is likely to be the vehicle, although people might argue between the furniture and fixtures and the vehicle. We're going to go this way, and it's 12,000. I'm just going to quickly format my column here so that we can see it. So I have all of my assets listed: cash, accounts receivable, furniture and fixtures, and vehicle. And it'll help you as you continue your study of accounting to really memorize where they go. If they're an asset, a liability, owner's equity, revenue, or expense, it'll help you in your study of accounting if you can sort of know that instead of looking it up. So what I'm going to do is I'm going to calculate total assets, and I'm going to make a heading that says total assets, and I'm going to add these up. I'm going to do a sum function here in Excel. Excel is a nice way to do your homework, since if you need to change something, say you put accounts payable in there instead of accounts receivable and you need to make a change the number and the computer will do the math for you. So I have total assets here, and what I'm going to do is I'm going to put in some lines. If you've watched my other videos, you should have heard me say that whenever you're going to do a function, either a sum function or a subtract function, that you're going to use a single line here above the 20,000, below the 12 right there, to indicate to a user financial information that a function is being done. And then when we get to the end of the statement, we put double lines. That's what I'm going to do here. Real quick, I'll put my single and double lines in. I know it's a little difficult to see in your Excel screen, but hopefully you can see one line here and the double lines right there. And you might stop and say to yourself, Mrs. Cesario, why are you putting double lines there? All we have are total assets, when we know that a balance sheet is like our fundamental accounting equation. It's its assets are equal to liabilities plus owner's equity. And you're saying we only have assets, so how can you put a double line here to indicate that you're completely finished? Well, the balance sheet is a little different because we say the assets are finished, so this side of the fundamental accounting equation right here is finished. And when we do the other side, liabilities plus owner's equity, we'll use another set of double lines so that the user knows that the liabilities plus owner's equity side is finished. And what's unique about a balance sheet is it's somewhat like a scale, as it should be in balance. What is on one side of the equals has to be on the other side of the equals to make it true equation. So assets have to equal liabilities plus owner's equity. So let's go ahead and keep going. Underneath, I'm going to put my next heading, liabilities, since that's what we have for our fundamental accounting equation. And I'm going to list my liabilities. I have two. I have accounts payable, and I have notes payable. Generally in accounting, we are going to record our liabilities in order that they are due. So current liabilities, liabilities that are going to be due sooner, are going to be listed first, and longer term liabilities are going to be listed second. For those of you in my Financial Accounting 1 class, just as long as you get them in the liability section is all I'm asking for in Financial Accounting 1. So we're going to list accounts payable first, and I'm going to record it for $5,000. And then I'm going to list notes payable second, and I'm going to list that for $10,000. And I'm going to make another heading here that says total liabilities. And I'm going to do a sum function. I'm going to add the 5 and the 10 and get 15,000. And again, there was a function. I'm adding 5 and 10. So I need that single line in there to indicate to a user of financial information that I have done a function, that I'm adding up a column of numbers. So next I'm going to go to owner's equity, and I'm going to list owner's equity. And I'm going to type Danielle Capital in there. And remember that we get this $5,000 from the statement of owner's equity. You need to calculate the new capital number for the balance sheet, because this is for a single date and time, just October 31st, 2012, and Danielle's capital, there would have been transactions all during the month. We would have had revenue and expense, which would have become net income or net loss on the income statement, which we would then transfer to our second statement, statement of owner's equity, where we would look at what happened with net income and drawing, and we would calculate a new final ending number for Danielle Capital, which would reflect what is actually in the capital account on October 31st, 2012. Since we only have one owner's equity account, we don't need to have a total owner's equity. We only have one. So I'm just going to come down here. I'm going to say total liabilities and owner's equity. And I'm going to, again, add up my liabilities and my owner's equity. I'm going to put an equal sign here. I'm going to grab my total liabilities, and I'm going to come down here to capital. I'm going to add B15 and B18. I'm going to get 20,000. Oh yes, this is a good feeling in accounting. We always want to be in balance. So let me put some color there. I have 20,000 there, and I have 20,000 there. We are in balance. That is what every financial accounting student wants to find when they finish their 3 financial statements, that they're in balance. It does not necessarily mean that you're totally correct, but it does mean that you're in balance, and it's more likely that you're correct. It can be frustrating as a student if you can't get these 2 numbers to balance, but I can tell you also that when those 2 numbers balance, it's a very good feeling. You get very excited, you feel very accomplished. So I'm going to go ahead and put in my lines. You can see I have a single line on top, and hopefully you can see on the bottom I have the double lines there. The double lines indicating that I am complete. And the balance sheet is one of the few statements where you have double lines in 2 places. One at the assets to indicate the first part of the fundamental accounting equation, and one for liabilities and owner's equity to indicate the second part of the fundamental accounting equation. Hopefully you've enjoyed this short video on the balance sheet and that helps you in your study of accounting. I hope you all have a great day, and I'll see you for the next video.